So it sounds like there's a rainbow of options depending upon where any one person fits, and there's a lot of different opportunities for that person given their occupation, situation financially. And I've always leaned on Debbie when I have self employed borrowers. That's been my go to because you don't fit into a traditional box at that point. Hello and welcome back. This is Team Meg G and Lauren Z and are pulling back the series curtain, keeping you fully up to date on all the fluctuations and changes throughout the market that we're seeing day to day. So today we have a wonderful guest, one of our most trusted lenders. This is Debbie Bennett with Angel Oak Home Loans. Hi, Debbie.
Hi, Meg. How you doing?
And of course, we always have Lauren Skudowitz, my business partner here, and she's going to pop it off with our first question.
Okay, so Debbie, when I think of Angel Oak, I do often think of portfolio products. So can you tell our viewers what your best performing portfolio products are with the current rising rates?
Absolutely. So we have been doing non-QM or non-qualified mortgages since, I want to say 2013. So we were one of the first ones to get back into, they're not, by any means, they're not subprime loans, they're just out of the box loans. So sometimes you have clients that don't fit in your normal conventional jumbo, government loans, and they need something else. So some of our most popular products are the bank statement loan for self-employed borrowers. Those we're going to take their income from their bank statements, or we also can do a 1099 and work off of those deposits for the income. We don't bring tax returns into that loan product. Also, our investor cash flow loan is one of the other most popular loans. That is, most of the investors reinvest their money. And so we have a formula that we work off of. The appraisal plays a large part in it, but we do that to qualify the borrower. It's more off of the mortgage payment versus the comparable market rent that comes in on the appraisal. So those are two of our most popular. We do have other products. Sometimes, especially coming out of the crash, people had, foreclosures or short sales that they had dealt with during that time. So we have a shortened seasoning period for those. We've had, but our other portfolio products, our Platinum program and our Portfolio Select, those are for, we have clients that need them for various reasons. And they're just that we have a little more flexibility with the guidelines. So we use those products to help get more people either in their home or for them to refinance or get cash out of their home.
So it sounds like there's a rainbow of options depending upon where any one person fits, and there's a lot of different opportunities for that person given their occupation, situation financially. And I've always leaned on Debbie when I have self-employed borrowers. That's been my go-to because you don't fit into a traditional box at that point. So that's awesome. I do also want to ask you about your crystal ball for the remainder of 2022. Since we're basically July right now, and we just had that Fed meeting where everyone is chattering about how intense the increase was. What do you think is going to happen with rates for the remainder of the year? And what do you think that clients can do with this information?
That's a great question. And we've had lots of people reaching out to want to discuss, when the Fed met and they had their rate hike last week and, rates. So when the Fed raises rates, it impacts the bond market, which impacts our rates. So if rates, are increased by a certain amount, it doesn't necessarily mean that ours are going to go up by that exact amount, but it does, increase or decrease rates depending on what's happening. So for the remainder of 2022, I do wish I had a crystal ball, but they are. I don't think they're going to continue to rise at the pace that they have from the beginning of the year, the first part of the year. But I think we are going to see some fluctuation. I think we're going to see them, move up some and then maybe settle down, and then, but I don't think we're going to see the type of increase that we did from January to this point in the year. But they went up quickly. So I think that now we'll just see them leveling out some.
A lot of predictions that I've seen said we could anticipate rates at a 7% by the end of the year. Do you feel like that's accurate?
I have seen that as well, just in research, and I don't know that anybody knows for sure. That is a possibility, since they have pushed into, on a national average, hitting about that 6% mark. Right. Some rates are still, we're still able to get rates slightly below that, but they are, nationally, they're going up. So I've seen anywhere from, some that are lower, which I think that ship has sailed, but I think that there's a possibility we could. Now, could they settle back down, and will we see pockets of them possibly settling down? Yes. I mean, in May, they tried to settle in a little bit, and then everybody got riled up with the Fed meeting, and that's when we saw this last increase.
Are there any products besides the portfolio ones that you touched on at the beginning that you would recommend right now that maybe buyers aren't aware of?
So the products are all, relatively the same that we've had. We have multiple options. Let's take our jumbo loans. We have several different options within that group that, maybe not everybody fits into the, perfect credit, fits all the guidelines. So we have some that, one that follows Fannie Mae's guidelines, so it'll go to a higher debt to their income. But what I'm seeing more of that we did not see a lot of for quite some time is we're having the discussions about people buying down their rate and getting their rate lowered that way. So that's, not only getting them in the right program for them or loan product, but also talking to them and really running different scenarios to see how much savings they would have if they did a one-time buy down. So it's just a one-time cost, but seeing how much savings they'll have between if they don't buy down the rate and if they do versus the cost of that buy down, and then what their break-even point will be. So if you have somebody saving, $75, that the break-even point is 3.5 years, and they're planning on being in the home 5 to 7 or longer, then that may make sense for them to go ahead and put a little more money into it at the time that they close to keep that interest rate a little bit lower. It's also helping people qualify. We have people that have been building homes that started last October or last year at some point when rates were, in those high 2s, low 3s, and now they're, higher. And so we are, I've talked to borrowers and we've worked through possibly buying down the rate to get them in a more palatable situation with their mortgage payments and sometimes to qualify.
We're all moving in step with what's happening. And I think what people do need to remember is we are such a favorable market compared to the major markets throughout the United States. We're still seeing such strong inbound relocation clients. And, we're not the Chicken Littles of the world. We're going to educate you. We're going to make sure that you're fully informed as to what's happening with the market, the best move for you specifically. So if you have questions on what this could look like, Debbie's a wonderful resource. And of course, we're happy to connect you. And we thank you, Debbie Bennett, for your time today. And we look forward to talking with you again soon.
Thank you for having me.